Family, it's Saturday and everybody today is thinking about how to go party, how to go drink, how to go out and have some fun. But you even took the time to make sure you took a section of your day to watch some videos on financial literacy. So I want to salute you. Get this video to 1,000 likes at a minimum so that we can make sure the message is getting out to the people. I got some stocks that I'm looking at that I feel can run up in this upcoming week, if not into 2026. Two of them are long-term holds. One of them is a long-term hold, but it's more of a pop. We got what's called earnings coming out this week, and this is going to help this stock be able to have a nice move. The first one I'm talking about, but before I get to it, make sure you talk to a licensed financial advisor in your area. Investing carries risk. But funny thing about licensed financial advisors, you ever realize that every athlete and every celebrity and people, they always got financial advisors, but some of them still end up broke? That's because you need to get your own financial literacy, and that's what I'm teaching you right here for free, right on YouTube. I don't want nothing from you. Just hit the like button, family. Now, Adobe, ADBE. This is a $346 stock. Now you're thinking to yourself, Keenan, that one already ran, it's already high. Actually, no. This one used to be a $500 stock, and it came down. So we like good companies when they are coming down and crashing down, because then they could go back up. The whole point of getting into an investment is not just so you could double your money, triple your money, quadruple your money overnight. It's so that you could get into something that's going to actually grow. You can always get out of it and then move to another thing that's moving faster. But you got to be able to find things that are at least moving in the right direction. Some of us have gotten so good at losing money because they don't understand the market, that if you would have took the exact opposite trade than you took, you would have probably been rich. So I'm trying to show you how to pick good trades. So now, watch how I'm looking at this one. Adobe is $346 right now. It's up 5% on the day. I look at the 200 EMA. This is that red line right here. It's called the 200 exponential moving average. It's just a trend line. And notice the trend is down. And we actually fell to $311. That's a better spot to buy this, but we starting to pop back up a little bit and kind of break up that trend and switch more to an uptrend. Adobe, Wall Street thinks that they have a $560 fair value when you look at what they're worth. So there's a metric on here that I often teach. It's called the PE ratio, the price to earnings, and the price to earnings on this is 21. With a tech stock, generally a price to earnings of about 30 is normal these days, and this is 21, so we love to see it. Wall Street been giving it new price targets lately, and they've been saying that it could go to 460, for example. Now, why am I bringing this to your attention? I want everybody who is watching this to start to step into their grown man, step into your grown woman type of investing and trading, where you realize that the slow and steady growers, and I don't mean slow like 20 years, I mean slow like over even a few months, right? You want to get into things like this that are being consistent, because imagine that you was trading like that when you got into the game versus the hype things that you might have jumped into. If you want to get my trades exactly when I buy, exactly when I sell, exactly on the dot, where I'm getting in, where I'm getting out, what my profit targets are, the link is in the top of the description. You could join KGU, you book a call with my team. I'm looking forward to seeing you there. When you go to the description, it says get my trades. Let's get into some more things on Adobe. I told you the PE being 21, that's excellent. But then we got the price to sales. This is the revenue. So PE is price to earnings. Earnings is what you keep. Revenue is just what you bring in. The revenue is right in line with the industry that they're in. You love to see that. Actually, it's a little bit lower at 6.25 when the industry is at 6.6. So the revenue was on point with Adobe, and the earnings is on point with Adobe. So when we see things like this, we ask ourselves, why is this thing even as low as it is? Why, when we look at the forward PE, it's 19? Why are these numbers so low? The reason is because people think Adobe is going to get smoked when it comes to the artificial intelligence wave. Now, all of these companies, they can only go down to a certain point before they start to bounce back up if they are still profitable and making more money. So is this company getting better with the money or getting worse with the money as the stock is going down? Let's take a look. We can see right here that they said Adobe is down over 25% year to date because investors fear it's going to get disrupted by AI. But let's look at the numbers. 2024 Q2, all the way on the left, you can see that they were making somewhere around $14 billion in annual revenue, but they jumped that all the way up to $20.45 billion just in Q3 of 2025. They upped their reoccurring revenue by almost $6 or $7 billion. That's crazy. And the stock is just falling, family. So what does that mean? People are getting on subscriptions on Adobe. When we look at the revenue also here for 2025 Q1, they expected to make 5.6 billion, but they keep beating it. And then now for Q2, they expect to make 6 billion. So they're bringing in more money and then they're keeping more money quarter after quarter. And then some of it is reoccurring revenue like a subscription. We like to see things like that. Now, Adobe is one that has their earnings coming out next week, meaning it's going to be very volatile. So put that one on your radar at a minimum. We like it preferably in the lower ranges, the lower 300s than where it is now. But if they keep these uptrends on the revenue and the earnings, this company is very likely to shoot to the moon. The next banger is Apple. This is the one that I was saying is more of a dollar cost average kind of a play. Apple's 200 EMA on the daily time frame is 238. We are not there. We are actually significantly above that. So here's the Apple news. They said that within the last 72 hours, Apple's AI chief steps down. Okay, so they lost that person, but they wasn't spending that much money on AI anyway. So then maybe they need somebody better. Then they said Apple's head of UI design leaves to Meta. Okay, the user interface people, they left too. But when you think about your Apple phones and your iPads and everything like that, the user interface, it ain't really changed all that much over the years. So, okay, maybe we need somebody different. Apple's policy chief steps down. Okay, Apple's policy chief, he's down. Okay, cool. Apple's head of general counsel steps down. A lot of people who are in the executive spots, they step down. So what does that mean? Apple's going to be able to get a whole new and better team. Why? Because Apple been the same for years. All these iPhones, they've been very similar looking. They've been very similar functioning. If you get an iPhone 17, iPhone 15, 16, more or less is going to feel the same. So what do I say with that? If we're getting rid of all of the CEOs at the top, then we're going to need new people, and they could actually make Apple different than it's been over the last 10 years. And they're saying this, Apple got the money to do it. There's an idea in a metric called CapEx, aka capital expenditures. And they're saying that Apple spends a fraction compared to its peers. Apple spent on AI, artificial intelligence, 12 billion. Meta spent 70 billion. Alphabet spent 90 billion. So they got a lot of money that they didn't even allocate to this stuff yet. So if the artificial intelligence quote unquote bubble like they telling you pops, then Apple is going to be a company that has the cash to actually catch some of those bottoms on the things that they want to be in on. For example, getting better executives. Now, the last one on the list, and remember, Apple to me, dollar cost average, I can see this one going into the 300s as long as we stay in a bull market for 2026. Amazon is the next one. Amazon has not moved that much compared to its peers, but the price of the stock is good compared to what they earn and compared to their peers. Apple is a $229 stock. We prefer it under $219, close to the low 200s, but we will still be willing to get it now. We mean it me. That's what I'm talking about. Remember, I can't give you financial advice. This is what the policies are and everything like that. But I'm telling you how I'm looking to make money, and then you're going to hear about it. I'm going to come back and I'm going to tell you, yo, this is how I looked at Apple, and this is what money I made from Apple. This is what I looked at Amazon and so on. So you heard the videos already. I'm just telling you in advance of what I'm always thinking about doing. We look at it, we like it under 219. However, we want to look at the metrics. We want to see, you know how they tell you look at the chart and you want to see higher highs and then higher lows? If we look at the revenue chart and look at the orange line right here, we can see that the lowest they expected to make was 155 billion. This is the beginning of 2025. In the beginning of 2026, they think the lowest is going to be about 174. So they're saying that their estimates of money that they got coming in is getting higher. The lows are even getting higher. That's great. And then we look at the financial indicators, the earnings per share. I'm going to simplify that for you. Basically, look at the bottom where it's green. They earn 52% more, 86% more, 62% more, 33% more, 36% more. What are these numbers? They telling you that they're getting better and better as a company at being efficient and earning more money per share of the company that exists. So for these, I see them as dollar cost average stocks, family. I love y'all. I appreciate y'all. I see you on the next one. If you want to get in KGU, tap in with the family. We're looking forward to seeing you so you don't got to trade in the dark anymore. I see you on the next one. Get my trades. Top of the comments. Take care.